In many cases, only VCs watch the growth till the time they now qualify to be ready for the IPO. When they go into the IPO, very attractive numbers are given out of their growth, of the value that they have, or the value they will generate over a period of time. Who gets attracted? A gullible investor like me, isn't it so? We're shown very we're shown very good numbers. We're shown the future is growing. Everything is hunky dory about it. So we want to have the feedback of that new IPO. Once we get in, we find after a small period of time, we find that VCs have gone out, angels have gone out. Who is left? Me. I am the investor. And the company doesn't perform. Whose money has lost? Mine. Who has earned till that time? The VCs have gone out to 10x money. This happens with most IPOs, tell you that. Be wary of what IPOs show in the right beginning, but nevertheless, that's a different story. IPOs is the stage where VCs take their exit. These are certain things you can read them out. It is when a private startup offers shares to the public through a stock exchange, converting itself into a public company. Early investors, angels, VCs often sell off their shares during the IPO. Public listing creates a liquid market. This is the only advantage that happens. It gets into a liquid market where you can purchase or sell at any moment of time when the market is open. So you are not stuck with your money. That is the only advantage with the investor. You find an opportune moment of getting an exit, you can get it. Before that time, for the private company, it's a long drawn process. Either the company has to buy back if it has money to buy back. If it declines that it doesn't have money, it will not buy back, then you will have to find out another investor to whom you can sell your shares. If he also is not ready, then the shares are with you till the time some important person or a wealthy person will come and rescue you out. That is the problem with private equity. The valuation is much higher, allowing angels and VCs to realize significant returns. It is at the time of declaration of the IPO that VCs get out. Acquisition, there are other exit options also. Other exit option is companies are acquired. One company is acquired by a larger company, then the company gives you an exit. He wants everybody out of that so that they will have the entire company for themselves. They will give you good returns. That is one good method of getting an exit from a private company. Secondary sale of shares also takes place. It's when shares are sold in bulk from one company, one private individual to another private entity. That also gives you an exit. Here's an example. You can understand how VCs work. If a VC has invested 2 crore at 10 crore valuation, what happens? Company goes public at 100 crore. How much has he earned? 2 out of 10 means 20% of equity. Out of 100, 20% equity would mean 20 crore. Means for 2 crores, the VC earns 20 crores. That is what they are actually looking at. That is how they work. This is the valuation. Anybody knows anything about valuations? I don't think so. It's a very technical subject. I will also not go into very many details. I've just given an overview of valuations, how it happens. Valuations are of two types: qualitative and quantitative. All companies are valued.
Can you just define the exact word? What's the valuation?
I'll tell you. Qualitative and quantitative has a difference. This slide will talk about qualitative methods. The next slide will talk about quantitative methods. Quantitative methods is when you take numbers as base for valuing that company at a particular date. Usually companies are valued every year, once every year. But some companies also do it on 6 monthly basis, biannually. But normal process is every year a company is valued on the basis of numbers. What numbers would be taken into account? All those companies who are earning revenue or doing business or have assets that they have created. On these two bases, mostly those companies are valued, taking those numbers as base. If once we're talking about startups Startups do not have numbers to show till the time they earn revenue. So before revenue, what would you do and how would you value that company? We were just talking about the valuations. We said a company was authorized to have 10 lakh rupees as the first amount. 10 lakh was the valuation at the initial stage. We found out that at the stage of the angel investment, valuation increased to 45 lakhs pre-money before that amount came into the company. Post money valuation went up to 50 lakhs with 5 lakh input. So 50 lakhs is the valuation. But 50 lakh was made up of 45 plus 5. Where did 45 come from? It has not earned any money so far. This is the question. How do you arrive at the figure of 45 lakhs? This is the question. These are methods. These are methods which are universally applicable. Most of these things come from Y Combinator. Have you heard about Y Combinator? Y Combinator is an incubator, American incubator, where Facebook, or Twitter, or YouTube, you name it, the best companies in the world, they have been nurtured in Y Combinator. You can see what Y Combinator is all about. Y Combinator has given birth to all these big companies in the world. Those who have actually changed the entire dynamic of the digital media. So Y Combinator is the one where all new things come into being, where all new concepts are introduced. And these concepts have been introduced by them. This is followed across the world. Every country follows any of these methods. But most of the operable is this method, venture capital method, scoreboard method, Berkew's method, risk factor summation method. These take into account certain criteria, like this one. You take 50 lakhs as the value around which you will either make it an increased valuation or a decreased valuation. What you do, you give a certain value to the components, like how much is the idea scalable? Have they actually been able to MVP which has a market fit? What is their go-to-market strategy? How scalable are they? What is the strength of the team? Is that founder passionate about his own idea? These are factors which have been valued.
So there may be templates for this.
Yeah, there are templates.
There are.
Exactly. Those templates could be described in 2-3 slides. I have shortened it. So those are certain criteria where numbers are given. For example, the passionate founder. You keep 5 lakhs as the maximum marks for that. Then you assign 3 lakhs to it
For the founder.
on the basis of the value that you see in that founder.
Is there an agency for the, or we can do what offer?
No, you cannot do it offering. You can do it offering, but that's not valid. There are merchant bankers who do it.
Merchant.
They do it. They do all the exercise. So they value your startup. They have their own criteria. I'm just trying to give an overview of what they do. They give value to certain things and then do it. Risk factor summation method is you put everything into a risk. You keep a ballpark figure of 1 crore, and then every risk is valued and weighed. Like risk of going to market, risk of this idea in the market, risk of the technology that you have built. Everything is put in the risk factor. Then they see how much is that risk. Is this 10%? Is it 20%? If it is 20% and they have put a value of 10 lakh to it, 20% will be reduced. It will be valued at 8 lakhs. If risk of technology is put at 20% and the total value is 10 lakhs, what is the value now? 8 lakh is the value for technology. So with that summation, the entire total valuation is achieved. Scoreboard method is again similar. What they do, average valuation of similar startups are taken. If a similar startup is valued at 10 lakhs, they do the same thing and compare it with the strengths of that comparable startup and get to a value. VC method is backward engineering, re-engineering. They say after 5 years, we want this startup to be 50 crore value. That is the idea. Then, and I want my money to grow 10 times. So I should be investing and I want 10% of this company. I should be investing 1 crore so that my money grows to 10 crores at the end of 5-year period. So, but the first figure is important. He has to understand what would be the value of the company at the end of the 5 years. It's again an estimation method, but most of the VCs in India apply this method.
Is this valuation process a part of the compliances? Yearly we have
No, it's not a part of the complaint. It's for rounds, funding rounds only.
funding.
You want to have a fund round, you need to have a valuation. Otherwise, they will not agree to any ballpark figure.
So they will go with the process, they will issue a statement or a certificate or something like that. We have a
They
valuation.
give a valuation report, a proper valuation report, which is an authentic report, because they are supposed, under the law, they are supposed to give that valuation.
Limited companies does issue it online. Limited companies valuation is available online.
It is available, but it's not acceptable to VCs unless merchant banker or the authorized valuer gives this valuation.
They are very intelligent people. So
Mhm.
it's not-
In any case, without valuation, no funding takes place. Now, this is the post-revenue startups and businesses. There are three methods mostly. This is comparable company analysis. A company which takes an exit from a certain stage, or winds up, or gets acquired by some other company. The valuation that was decided about that company, you take it as a comparable method, and that's all. But the two methods that are in vogue, I can do it. I can do all of these methods. I have actually mastered this one. Even today, I am giving this report to somebody. Discounted cash flow method. This is the most used, but a little bit complicated method. I took a challenge upon myself that I should understand this and do it, and I'm doing it right now. The second one is, I'll talk about this in detail, asset-based management. You simply take value of the assets from your balance sheet. If you're an asset-heavy company, you to take the value of the assets in your balance sheet, that is your net asset value, and that's the valuation of the company. Simple method. And this is done by CAs. Simply they give a certificate that your balance sheet shows this much of asset value after depreciation. This is the company valuation. Shut up.
How do you discount present value? What is the rate that you like?
No, this is the method I'm trying to explain to you. DCF method is in board, and it is acceptable across board. Most of the companies, even startups, take it once they are going to revenues. What we do, we take revenue of the current year or historical revenue. If we are in revenue for the past 2 years, we take the percentage of growth that takes place over the couple of years that we have been into business. And we also project it over the next 5 years. If we take it at a certain percentage of growth, let us say we have grown at 15% previously in the last 2 years. We
I'm
take,
saying if you take it as present discounted value, you need to discount it at any rate.
I'm coming to that point.
Suppose in economics we take sometimes inflation, sometimes rate of interest. That's what I'm saying. Which rate do you use to discount future value to find its present?
If you pass for a while, I'm coming to that point. I'm saying we start with the growth rate that is possible for a certain entity which has shown a certain percentage of growth for the last 2 years or 1 year. On the basis of that historical value, we value it over the next 5 years. We give a grading point. If it grew at 10% for the last 2 years, we say that now it will grow at 12%. Next year it will grow at 13%. The year ahead it may grow at 15%. For all these 5 years, we take the mean growth, which is taken as CAGR, average growth over the next 5 years is taken as growth rate. Then what we discount is the next year, right? What should be, according to you, what discounting should we do, and on what basis?
I don't know. That's why I asked.
Okay, fine. We discount it if we have grown, if we show in our growth curve, we show that we will grow at, let us presume 25% in the 5th year, next 5th year, 25%. But at present, we need to discount it to the current rates. We have to make the difference between that figure, which was supposed to be our growth rate in the 5th year, and what we are growing right now. The difference is the discount, right? So discount is given on that account. Then we say what will we grow after 5th year, 6th, 7th, 8th year. Do you have a figure? We cannot say, we cannot predict as much as 6, 7, 8. It is too much of predictions. So what we do, we say a perpetual growth of rate after 5th year, which is taken at a very nominal rate of 3%, 4%, not beyond that. So that gives a leverage. That does not make it too much exaggerating figure. It gives a leverage. We take perpetual growth at about 3%. Then we also allow for debts in the balance sheet. If we have debts, we come to a figure of valuation, then we discount it by debt also. So it gives us a very realistic figure of growth. It actually happens. This method is applicable for all and by everyone. This method is most scientific, most rational. There are more steps involved, and that will make it more complicated. I've just given an overview. At any future point of time, I will actually explain it with reference to a certain case. That will make it more easy. Not now, because I initially thought I have to be here for 1.5 hours. It has exceeded beyond that period. So these are the methods of valuation. One, this is the quantitative method where we take numbers into account. The other one, we took quality into account. Now there are other methods of funding. It's not necessary that you take only equity. There is convertible debenture is one vehicle of one instrument of funding. Safe, simple agreement for future equity. This is again a brainchild of Y Combinator. They introduced it a few years ago. In India, it has now been introduced because compliances are very minimal. And you know, in our geography, compliances are more important than anything else. So compliances wise, if this is a minimal compliances product, it is not preferred. Otherwise, it is very much win-win situation for startups as well as investors. Debt, you know, debt is a regular method where you take a debt from a bank or an institution and pay an interest till the time you are able to repay it along with the interest. The convertible debenture is a very classical method where you give an amount. Like we take the example of angel funding round, which we discussed. I needed 5 lakh rupees from a company. I went to the angel investor. Nowadays, angel investors also use this product. They say, okay, you give me 10% equity. I am not ready to give 10% equity. I tell him, you can keep your money with me. I will make you partner to the profits for a period of 1 year or 2 years if you keep that money with me. And if I have liquidity at the end of that period, I will return it back to you. Finish. That way, I am saved from distributing equity, making him a partner. Otherwise, if I don't have equity at the end of that period, at that time, as per the agreement, I will have to part away with the equity. I will have to give him equity against that amount. This is this product. In this case, startup is saved from distributing equity at the beginning. And it's not incumbent upon him to convert it into equity at the end period. But there are 3 types of debenture notes. One is CCD, the other one is OCD, the third one is NCD. NCD is non-convertible debenture. Non-convertible would mean that there is a clear-cut agreement that it will not convert. You will have to repay it. OCD is optional. We keep an option open. Most of the instruments are OCDs. And the third one is compulsory, CCD, where it has to compulsorily convert into equity, where startup has no say in negating it. So at the end of the period, most of the instruments are done OCD, where you keep an option open for either converting or not converting. But this period gives one factor to the angel investor. He earns out of this income, out of this investment. Startup, on the other hand, if he gives him equity in the beginning, that is all he has to give. He has not to part with the profits. In this intervening 2 years period or 1 year period, the startup has to provide returns to the investor. That is how this instrument works. SAFE is a similar instrument, but it does not have many compulsory elements as debentures have. And then there is debt. Now we have a question for you. You have another exercise to do, and with this we'll wind up. Think of an angel investment round. You're raising 50 lakhs at a pre-money valuation of 2 crores. Pre-money valuation is 2 crores. Fine. In our case, it was 45 lakhs. Right? This case we have 2 crores pre-money valuation, 50 lakhs we want to raise. Founders have 1 lakh shares. Your point. Founders have 1 lakh shares. 2 crore is the pre-money valuation, and 50 lakhs we want to raise. Question number 1. There are 4 questions. I want you to attempt any of these or all of these, whoever tries. What is the post-money valuation in this case? Just write it down. Tell us later. What would be the post-money valuation? Fine. What percentage of the company will the angel investor own? Right? उसको क्या मिलने वाला है, कितनी percentage? How many shares should be issued to the investor? Right? Investor को इस 20-50 लाख के लिए कितने शेयर मिलेंगे? What is the new cap table? अगर ये नहीं भी करेंगे तो the questions, first 3 questions are more relevant, and we have questions and answers after this. It's not a difficult question, but it will ease you a bit.
So ये जो pre-money valuation ये authorized आप कह रहे हो 2 crore?
No, pre-money valuation is always what has been achieved through rounds.
पोस्ट में तो उतना ही मिलेगा ना 2.5 बिकॉज फॉर एग्जांपल अगर हम बैंक में जाएंगे जब हमने एग्रीमेंट किया था कि 45 lakhs इज द प्रीमियम वैल्यूएशन फिर हमने 5 लाख उसमें इन्फ्यूज किए थे तो हमारा पोस्ट वैल्यूएशन
Right. It's the simplest question. Take a photo of this. You can try it later on also, because I want you to exercise over it. That will give you a clear understanding of what is happening with the cap table. I will give you answers to each of these questions right now. But if somebody wants to tell me, you can tell me. Otherwise, I'll go to the next slide.
Post this, investors will have basic amount plus the post this valuation,
Yeah.
right? And then divided number of shares.
You do it.
Basic amount plus post divided number of shares.
This figure is given to create to know the percentages. We have 1 lakh shares. Face value of 10 rupees. Should I go to the answers?
10%.
Number of shares would be, I think, 25,000.
100, 25,000. What do you think? Let me go to the answers now. Huh? Post money valuation, as you correctly pointed out, is 2 crores plus 50 lakhs, 2.5. Investors' ownership, naturally 20%, because 2.5 crores and 50 lakhs means 20%, isn't it? 20%. This is equity. Founders' ownership will remain 80% now. Shares to investors 25,000. We pointed out 25,000. New cap table is this. 1 lakh shares to the founders. They will not change, but equity will reduce to 80%. Angel investor will have 20%, because it's 1/5 part of it. And total shares would now be 1 lakh 25,000. Any questions?
Shares invested 25,000. How you can rise to this?
Because he had to be given 20% shares. So we'll
2
have
करोड़ के अगर 1 लाख शेयर्स बन रहे हैं तो 1 करोड़ के बनेंगे फिर 3,000 and 50 lakh के बनेंगे 25. This is simple.
सिंपल है, वही तो किया है। ये डिफिकल्ट कुछ भी नहीं था। नेक्स्ट एक्सरसाइज अगर इसी टाइप की दे देंगे तो आपको इमीडिएटली आएगा। ठीक है, एनी क्वेश्चंस नाउ? अच्छा, एक स्लाइड में आपको दिखाना चाहता हूँ बिफोर आई कंक्लूड, इसको छोड़िए, ये आपके लिए इम्पोर्टेंट है। व्हाट इन्वेस्टर्स लुक फॉर व्हेन दे गो फॉर वैल्यूएशन। वैल्यूएशन में वो देखते क्या है? दे वांट टू सी अ क्लियर प्रॉब्लम एंड अ वैलिडेटेड सॉल्यूशन। अगर आपकी क्लियरिटी नहीं है स्टार्टअप की, या आपका काम करने का काम है, जब आपका स्टार्टअप इन्वेस्टर के पास जाएगा, he should have answers for all of these. मैंने अभी एक स्टार्टअप है हमारा, एक स्टार्टअप, I brought him in contact with investors from Doha, Qatar. They were very seasoned investors. I knew a couple of them, but not all of them, and I was surprised with the value they brought in to the meeting. The investors, the startup founders are quite intelligent, hard-working, passionate people. They were ready with whatever they expected to be applied. But one of them told him, give me a number about CAC. CAC, you know perhaps, customer acquisition cost. What is your LTV? They could understand the terms, but they were not ready with the numbers. The investor told him, next time when you come in, I want to know an exact number. If you don't know your CAC, you don't know your business. They were very fine till that in explaining everything. But because they did not know a certain number, which was very important in their case, they were told bluntly that next time when you come in, you have to have this number. So, clear problem, validation solution, traction, MVP usage, early customers or pilots, they must have all of this in place. Solid financial projections and use of methods. Financial projections में वो भी आता है जो मैंने कहा CAC वगैरह. Unit economics is a subject in itself. You have a big business. When you break down a unit, considering the entire business as one single customer, what are your financial dynamics? You have to understand. That is where CAC and LTV comes in. If you don't know your unit, you don't know the entire story. So unit economics is basic to what investors try to understand from the founder. A credible, coachable founding team. This is very relevant for many investors. They want not to have an egoistic startup founder who doesn't want to bend from his position. He is in a comfort zone, doesn't want to come out of it. There are people who want to tell the new stories, new things. But this man says, I know it all. They are not to be coachable, they are not to be fundable. Exit potential or a scale strategy. They must know when that investor will exit from the startup. What is your strategy? How much funding is required? How will it be used? They want to know from the founder what amount they will need and for what do you need. These are very existential questions for them. If you don't know what for this money is to be used, you don't know your business. You can take a photograph of this and tell your business startups, whomsoever they are, that this is what is required by the engineers. Thank you very much.
Thank you very much. So I have one question. When banks put in money into the ventures, say for example, we have heard so many of this all that. So do they act as venture capitalists at that time, or they are simply that's that?
That has a different formula. That is that they put money into the business with this expectation that after a moratorium period of 3 months, 6 months, whatever is decided, they will get their returns of basic amount plus the
Plus the
interest.
interest part.
Once that comes in regularly without getting into NPA, a bank has no business in the business, right? Venture capital is something different. Venture capitalists are not supposed to take monthly take backs. They are invested into the company with this premise that it could also result into a loss.
Yeah.
That way-
I understand,
Yeah.
but what I'm talking about is, say, there is a financial organization, say, we will take example, because we are on the JK Bank. Let's take example of JK Bank. When it invests in companies, say, in Kingfisher, in Adani and all that, does it act as a venture capitalist or it's offering the debt funding?
It is offering debt funding only. The banks are not supposed to do business. Banks are not supposed.
So they are already earning the interest.
They are only interested in earning interest, nothing
And
else.
keeping track of when it is going to NPA.
Only they are only bothered about NPA. Should not go for NPA for 3 months continuous reports. If that doesn't happen, they are happy getting their money back.
And they have different products for this corporate funding.
They have products, but they are all interest-based products. Basic fundamental rule is the same. Banks can never be easy.
So I want to know what anticipated role is artists.
In what?
Small artists. How many of you have been business from last few years? What your company has contributed to the society?
Artisans.
Society, or to our artists. Our economy is based mostly on this. And those people are suffering a lot. I haven't been closely with them for some pilot projects what government has gone through. So I've seen so many problems they're facing. I want to see what your company has done on
It
social
will open
norms.
up a Pandora's box for you if we start discussing all of this. It has to have a different session. You know what? Social enterprising is something different than commercial enterprise.
That's absolutely fine. And especially you, have you ever done
No,
anything
not
related to
not
that?
exactly, not exactly. It's a
That's
different story, different ball game. You don't expect many returns from them. It's not an exponential industry where big market margins and big profits are taking place. So an angel investor would go into such kind of an enterprise. Yeah, that's what I told you in the beginning, that our investors are interested in getting into real estate, gold bonds or something else, which gives them more profits.
Actually, artisan ecosystem I was just going through some research on that. I faced some challenge.
Even though they need
Where are our
small,
angels?
no, they need small ticket investments only. The 50,000 amount would make a large difference in their
Big
life.
difference.
But the donation model, I think donation model will work better in that sector than a regular commercial model. That's my take on this. And we are actually working on this. We have a different NGO, which is by the same name, Common Global Foundation. While we are trying to do this kind of thing, microfinance, we are trying.
So why has not the crowdfunding
It has already
been the
started.
source of funding for the startups?
It has been discontinued by the regulator. It cannot be done on commercial basis. Hawala was involved. Any dirty money could come in through a hawala, through a crowdfunding platform. It can happen. I can crowdfund my own startup by getting my money through different sources and tell the regulator that this is not my money, it has come from very generous people. And those generous people have not my money. Right? So in India, the crowdfunding for even for NGOs is not fully open. It is open till 2,000 rupees per day. Just 2,000.
Number?
It is a number. Yeah, the amount is definitely there, but numbers also are after a certain scale. Crowdfunding is not accepted in India. I think I should take a leave now, sir.
Sir, thank you, sir, for a very important lecture, I would say, because money matters very much. So, इसकी knowledge भी will add mostly. So, hopefully, inshallah, they will carry the information to the students. जो main motive है ICT का, we have to tell our students कि कैसे finance, ये बहुत बड़ा block रहता है कि ultimately हम कुछ करेंगे, we get the patent and we want to do startup, लेकिन फिर कैसे, how we'll manage the finances. Thanks for this enlightening session. This is a certificate from the AICT.
Thank you. I want somebody to take a picture of this.
ये हमको लाना है, उसमें AICT वालों को Thank you very much. Thank you, sir.
Thank you.
So we'll break for lunch, inshallah. After lunch at 2 o'clock, we'll have the speaker for the afternoon. Is there like we met him in the incubation center, Dr. Shahid Saab. So he will be here inshallah at 2 o'clock. So after lunch, thank you.
Next time.
Every quarters,
तो हम भी यहाँ पर हम 5 मिनट ये वो
ये सॉलिडिटी
क्या हुआ कि अभी ये था गांधरबल में लोग आए हैं रोड पे ना इसके साथ हमें सुबह भी बहुत डिफिकल्ट आ गई यहाँ आने में ना 63 ये भी तो
अच्छा आप मसूदी साहब के भाई हैं
हाँ हाँ
अच्छा
हाँ शुक्र है अल्लाह
you are in China for the
so what she has requested for us particular day ना us was little bit short that's right ना घर वाले मुझे सुबह कह रहे हैं मजबूरी से हमने कहा मजबूरी है जाना है
तो यहाँ से अपन कोई कुछ शायद मतलब
नहीं hello unfortunately
मतलब पूरी है Kashmir से क्या Allah के सर हम काम नहीं किए everybody ना Allah ताला ये
सब वो जो दुनिया से कुछ ट्राई नहीं किया
दुनिया में जो
and the global politics, it is not in our hand. Why to worry for the Spanish but for comparing culture actually we can as you said we can more take that Spanish we will shorten the class with If you wasn't kind of journey, you should unput then I'm kind of mentoring them. Unput we say so everybody has to grow. We have to learn. इसलिए तो we don't shy away from that. Coach Paros Python, I have been in 10 years software development industry. मगर other technologies, Oracle, Java, I've started with C, C++. Paros और ये Python मेरे सोनामन में क्या research scholar तो मैं तो वही ये चीज़ मानता जाकर ये मैं चुका हूँ तो मेरी चीज़ बाय रोज में तो और बोलते तुम पागल शेर इसलिए तो अगर I don't shy away from learning, I still learn things about this AI, generative AI, ना तो नई technology so learning. शुक्र अल्लाह I feel काला तो मैं हम तो गाना कराएं कोई चीज के पाने में जो टाइम दे
ऐसी कोशिश है अब तो भाई कोशिश है ज्यादा रिजल्ट का इम्पोर्टेंट है
रिजल्ट होता है What does the demos options? Can we have some series of lectures? It is not only possible. And we are coming from zero. Which is zero student class.
No, you should not. You should
Continuous engagement. Once we apply, obviously, we have commitments. This can model curve device, for example, it could be 1 day in a week, means 1 hour in a week. Come to choose the because we have the diet properly, we see how many students will participate in that. But maybe it will go for girls up to 20, or maybe we can module by module 1 and module 2. Graduated. Because it's we have to, it will take long time. So let's take whatever number of years spent, it matters to us. We have to be realistic. We have to be realistic. Because it is your time, they can hold up.
advantage you should have
No, it was Quran translation was Arabic so Quran in super asal Arabic. But Mrs. like this, how is the no question? I'm only translated. This is translated. Yeah, if the career time we are never near one, never I catch it. So it was a good once a week, and it does have the results. No, थोड़ा comes from basic to no, in terms of being bachelors and student level something.
you can facilitate
So the good interest gafuna asal mere MTEL ke. So why they are hang up to WhatsApp or working on social media? Because they have exactly
they're not getting it outside.
exactly because even to boss on ke kasa man ko even ko kya which point you know degree of measurement how they will be motivated to study. So series na by some the problem is because I'm engaged with by things. I can just problem by the which you show them क्या करोगे डिग्री में इनको मकाच में मेहनत करता है है ना ये प्रॉब्लम और अगर तुम टाइप किया तो क्या एम्स्टर्डम में अगर ये सबक पढ़ोगे एम्स्टर्डम में थोड़ा कुछ ऐसे प्रॉब्लम है ना अगले ट्यूटोरियल में कौन से दो यूज कर जैसे okay I will give time
the once a week is okay.
I was on to whom to talk to that is how many इंसान से आप तो फोन
It's so great that the course experimental free month course with the goals, clear goals and interactions also, and then validate also. Which is good way. Reflection. Kind of test after every month.
online consultation. They will get engaged also.
They have some. They have. If you actually rather keep coming as your brain starts to
spend time to ask question. I somebody done it 25 years back to math, like a hard math information, and they have done it also. But once you get in context to skip this machine learning, which is class which is found self-study concept. other classes or something, and then I try to engage them, to say a problem, it's all problem, but then they get that motivation. He was try to martial you did it with the adults. Not going to get words from you.
One of the within a DR tool, I will find out what suits me. So I think as a solution, is one of the course that will make it 12 sessions. Yeah? 12 sessions. And try to make a capsule after that 12 weeks. The I'll give them a work to do at home for the weeks. Right? Next week I'll come up with the next session, but I'll take a
Like only to the one to get so start
Right.
That one was it.
Because each is engaged. But Akhya wasn't commercial. That is the company for us.
Same thing would be.
So there will work out.
Was thing that just which was you will come with that you are then case as a crore deliver and this will be the cost. So which crore broken authorities and subject.
Can you discussion? There's your
Barabar.
reference and then proposal.
Then I will propose it to director. Director will go after the want the financial so it's just how that I move on to
the proposal and let us do it. Which kind of missionaries we find more than but my company needs to sustain for that you'll have to have commercials also. Not sure that is a knowledge dissemination.